Focus then to jewelry companies. They're in focus after Dubai hiked import duty from around 0.36% to around 5%. To understand the impact of that, we're currently joined by Mr. Sanjeev Agarwal, the CEO of Gitanjali Export Corporation. Hi, Mr. Agarwal. Thanks so much, sir, for joining in midway through today's trading session. Tell us, what kind of impact can this have? Dubai has hiked the import duty from around 0.5% to around 5%. How much does India export on the whole, and how much of their export goes to the UAE, goes to Dubai?
Well, India produces about $80 billion worth of jewelry, roughly.
Okay.
Of which half is consumed in India and half is exported.
Great.
Last year's figure was $39 billion worth of exports of jewelry,
Okay.
Which accounts for about 14-15% of India's exports. So jewelry export is quite significant, and UAE is the largest market, accounting for 1/3 of that exports, roughly,
Okay.
Which is $12.5 billion worth of jewelry is exported into UAE. The other significant portion of this exports to UAE is the fact that majority of the exports, 90% of that exports of 12.5 billion, is high valuated jewelry, not cut and polished diamonds. Okay, so the margins are higher for the Indian exporter out of India to UAE, and that's a significant market. UAE acts as a feeder into the entire Middle East market, as well as buyers come in from Russia, CIS countries, even China, to buy diamond and jewelry from Middle East because of the lower tax structure or zero tax structure. So the 5% duty, which has been imposed from the 1st of this month, will definitely have a major impact on Dubai as the center and hub for trade and re-export from Middle East into Middle East from Dubai and into Africa, into Russia and CIS, and will also impact India because, like I said, 1/3 of our exports is to UAE. It would mean 2-3 things. One is the importance of Dubai as a trading hub for jewelry will diminish. It would mean increased costs for the Indian exporters to develop trade with the specific countries within the Middle East, like Iran, Iraq, etc., who have been buying large quantities of jewelry via Dubai. It would also mean that a lot of Indian exporters would start re-looking at the possibility of setting up manufacturing setup in the Middle East. The jewelry sector in India is the 3rd largest employment generator with 50 lakh workers.
Right.
And this would have a negative impact on our India's view of making in India and skilling India and increasing, and it will shift jobs into Dubai rather than retain in India because of this pressure. On the flip side, positive would be that a significant portion of jewelry bought into India, exported from India into Middle East and then bought back by the returning NRIs or the Indian tourists because of the duty difference of, it was 0% in Dubai and it is about over 11% effective in India. So because of that, there was a lot of inflow of tourist traffic and passenger carrying jewelry from Dubai into India. That will stop, and that will increase a little bit in the retail space within India.
Domestic, okay.
Okay. Mr. Agarwal, the numbers that you're telling us are very significant.
Yes.
India's market, $80 billion in terms of jewelry, of which 50% is exports, and 1/3 of that goes to Dubai, which means about 15% of India's entire jewelry market goes to Dubai.
That's right.
That's going to be a huge hit.
Yes.
What can the Indian companies do in order to avoid such a big dent to their overall revenues?
See, the immediate portion would be that it will have an impact on their revenue profitability, like because of the duty structure. The second step would be where the exporters will have to build direct linkages with the buyers in these specific Middle East countries, like Qatar, Oman, Iran, etc. So they'll have to, rather than using Dubai as the center of trade within Middle East, they'll have to go to each of these countries and develop linkages. And the third would be that some of the very large exporters of gold jewelry would look at maybe setting up shop or are already thinking of setting up shop within Dubai. Because since 2013, when the previous government brought in curbs on import of gold for exports and for domestic market, the environment has not been very conducive for the jewelry exporters because of change in policy on a very regular basis.
Right.
Yeah, so to that extent, then they would look at setting up shop within UAE, which would affect jobs within India.
All right, Mr. Agarwal, thanks so much for giving us, the entire setup in terms of, how exactly do these numbers shape up. But what about for your company, sir? How much of your exports go to the UAE? What kind of impact can it have on margins? You would have thought, well, we had demonetization, that could reduce consumption. Now, this appears that this is a double whammy. Your take on the same, could it hit your margins?
First of all, on the demonetization, it's quite interesting that the offtake of a lower price ticket of jewelry items ranging from, say, 20,000 to 60,000 has actually gone up. And our Gitanjali sales in shop-in-shops and department stores has actually increased, not decreased.
Okay.
And that's been the case of a few other branded diamond jewelry players as well.
Oh, fantastic.
So it's contrary and it's positive, and which sort of reflects that over time, there will be jewelry buying which will come in. There will be increase in buying from the organized retailers, and the unorganized retailers will have to shape up or ship out.
Okay.
With regards to exports, a significant portion of our exports is into into US and Southeast Asia, Hong Kong. Our exports into UAE would be largely diamond jewelry, where we sell them as branded jewelry in the name of our Nakshatra and Jili. So with the significant margins on that side, the impact on this would remain limited.
Okay. Thank you, Mr. Agarwal, for putting that in perspective. So it's a big negative for the industry.